If you're betting on the future of automation, robotics is your golden ticket. From the battlefield AI to warehouse bots, even surgical machines, this industry is moving extremely fast, and smart investors are looking at robotics right now and they're loading up. And hey, everyone's talking about Nvidia, but one to consider is AMD's powering these Starlink satellites and quietly expanding their GPU empire. Right now, I'm betting on AMD with some juicy calls for the future in June. Now, if AMD hits $140 by June, you can get $400 off lifetime access to Stockmate. Second link in the description. Let's get you paid. Literally looking at a recovery here of potentially up to here. This is $140. This is the type of bounce that we'd have to see or a recovery, and you have all the way until June for that to happen. So seeing a lot of upside potential with AMD, and if you want to not only watch me trade live every day at market open, but get to capitalize on the AMD swing and get $400 off Stockmate, then it's the second link in the description for our current sale. Thank you guys so much for tuning in. We're going over the top 5 robotics companies to be looking at. We're not talking about just Nvidia or AMD or something like that. We're actually talking about the specific companies. And let's take a look. LAZR, that's an interesting one. It's not fully robotics, but they're up 31% today after our coverage we did yesterday on the stock. So really cool to see. So the first robotics company is going to be Symbotic. This is a warehouse robot automating supply company that optimizes the supply chains at Walmart and Target and Albertsons. What? So real contracts with these companies. They got real robots that are already being deployed, and they have real revenue as well. So you can see their stock recently. It's been volatile. They've had good earnings, but their stock hasn't really recovered from some of these sell-offs. So here's what we're looking at with the technicals. Couple things to consider. If you go back a little bit further, so this level here, you can see that there is a trend happening. Now with Symbotic, you should know there is this overall downtrend. You guys kind of see that, right? So that's something to consider. But when you look at their revenue, which we'll get into, we're going to do a 3-part analysis. The first part here being the chart and kind of what the market looks like. They are at this maybe a support, not really kind of level, but they're trying to hold this level that they previously bounced at right here. So it's trying to hold this level. If it holds, then there's some upside potentially. We've seen it start to consolidate from left to right for the past month. So if I drop this down into, let's say a 4-hour chart, you can see from beginning of March to now, they've consolidated. The reason that I think that's interesting is because a lot of times is what it looks like before we see it start to surge. And the company has real contracts for real robotics. So that's why I also am looking at them. The upside potential here, let's say we see a recovery up to this lowering resistance, which I'm not sure why it's lowering. They're literally signing good contracts. But anyway, let's say that's the trend that we're expecting. That would be about a 40% increase to that level. And if you look at the risk to reward, it seems it's more in this buy territory here. And I'm not really looking at the full picture of the MACD and the RSI, but we can drop those in here. As you can see with the MACD and the RSI, they're starting to consolidate. You see the chart itself, it's going from left to right, even down a little bit, but the RSI is building some momentum. MACD is building some momentum. So that's what we call divergence, potentially seeing a reversal here for Symbotic on the technicals can make a lot of sense. I would set a close stop around $20 a share, somewhere in maybe $21 a share, and expect a move like this up into this $25 to $30. Now you might say, well, that looks probable, but what about the actual company? Well, let's take a look at their financials. You got Symbotic.com or Symbotic, and then we can also check out their website, Symbotic.com. Let's start with their website real quick. Take a look here. They got Symbotic as the backbone of commerce, is what they say, and they have some of their partnerships, including Target. When you look at the financials, though, this is where it gets kind of interesting. Look at those 4 quarters in 2024. Look at the year-over-year revenue. You see that? So year-over-year, 47%. Then it was 50% year-over-year. then it was 44%, and then year over year is 35%. If they're growing at that rate, that's tremendous. They're a robotics company that's bringing in around $500 million per quarter, real revenue. Their net income has been hovering between basically negative and positive. So they're right there. Take a look at that quarter three. They were positive in their net income. Quarter four, a little bit negative, about 3 million. But the beautiful thing about this is look at that earnings per share, up 900% as opposed to what was expected. Their revenue has been beating consistently, except just a tad bit down in this last quarter. But here's the deal. The revenues and the financials are indicating growth and seeing a robotics company be positioned with some of the biggest companies in the world, like Walmart and Target and Albertsons. Those are the, basically, if you guys aren't familiar, maybe you're from the UK or something like that. I don't know what it looks like. They have Albertsons or what have you, or Target. I'm not really sure, but I haven't been to the UK, but I know we have a lot of people there, and also London. It's basically like, I don't know, it's like the biggest grocery store available. Okay, so biggest grocery store in all of the big major cities like Los Angeles, San Francisco, Miami, New York, Boston, or what have you. These companies are operating on a big scale. And when you look at some of the contracts, take a look. We're not going to go on hype articles. We're going to go directly to the source. If we take a look at the industry, take a look at about, head over to news and events. Symbotic hasn't had any big releases from a news perspective since their quarter four earnings. However, they did get this acquire Walmart's advanced systems and robotics business and sign a related commercial agreement. It's interesting that they don't put the dollar amount there because we know it was $500 million deal. So they got a green box system, 144 million. And this Walmart deal here, expansion into Mexico and Central America, that's a deal there. But it was a $500 million contract with what was Walmart. And so $520 million is what they're paying Symbotic, okay, including $230 million at closing. And this micro-fulfillment solution that expands its addressable market by more than $300 billion in the United States alone. It's a massive market. It's growing fast. And when you look at the financials of the company, you take a look at their overview, they're a $13 billion company. They're tackling a $100 billion or $500 billion industry here. So I think if they're positioned with some of the biggest players and they start to get more of a foothold in that industry, seeing this company valued at 50 billion is not absurd. It's really not, because if you looked at the backlog that they have, this agreement here could add more than $5 billion in their future backlog. So essentially $5 billion in revenue that could be coming. If they're $500,000 a quarter, that's huge. The big picture with Symbotic is that they're innovating. They have these systems for automating the back-end warehouse operations for big companies, and they're doing it great. They are generating money, and they have the systems that big companies want. So that's powerful for the company to grow. As you can see at the support here, there's less risk and I would say more upside for Symbotic stock, especially seeing that they've had such good earnings the past few months. And with that being said, Symbotic's one we'll be watching closely. I included it here because this is a nice range for profit that we'll be watching closely, especially in our market live sessions. If you want to watch me trade live, it's the second link in the description. And again, we have that sale for AMD, which I'm excited about. So again, would love to see you at Market Open on Monday. Now, take a look at number 2. This is Teradyne, T-E-R. Let's search it up here. T-E-R, Teradyne. And hopefully I'm saying it perfectly. Maybe it's Teradyne. I don't really know, But let's take a look at the company. They own Universal Robots, and they're the leader in collaborative robots. Now, think about like robot arms that are helping humans in factories for like safer, faster, and scalable operations. And they have a really great angle of working in congruence with robots, but also with humans. A lot of the systems you see, for example, Symbotic, it's just kind of pure robots. It's good, full automation, but there's still a gap, a bridge that's happening where you have human workers and you have the robotics coming in. What if there's a company that like bridges that gap still? Maybe there's little nuances of the job that a robot isn't fully functional for yet. And this company bridges that gap and has a great angle on the AI plus human working together in their business. So take a look here. Their stock's been on this trend from $3. It surged to $168 before selling off. The trend on TER, I should say, is kind of consistent. It's quite bullish. You see this uptrend here. And the RSI, the MACD, looking more in this oversold territory. The resistance up here, if you're just kind of, let's scale it conservatively. I'm not going to even count these previous highs, although we can draw one top level resistance here. Let's just draw a resistance level there. Okay. And let's also draw a support right here. It's pretty clearly a previous resistance here and a support right there. So that would make a whole lot of sense. In this area, a little more consolidation, but it did act as a support right there. And you can see this trend starting to happen. Now, what we're looking at here is essentially a potential recovery on this stock. We saw it sell off with a good portion of the market. So the recovery, the potential for profit could be up here in this range. I do see this resistance right here as well. See this previous support, previous resistance, support right there. And that's kind of what I would be looking at as one of the key next levels, aside from maybe this level right here around $97. But that is the kind of outlook here, what it could be in the near future. So I like that recovery. It's a 25% recovery. And when it comes to the overall trend for TER, we see that risk looking lower, the upside looking bigger, 25 to maybe even 50%. So that's how the technicals look. More like a buy, less risk. I would want to see a bounce and more confirmation of an uptrend. And we can identify that and see what it looks like on Monday at market open and see how that reacts. But this is a key support. We'd like to see it hold around this $83 to $85 price point. And if we see a recovery up to around, let's say 93, 95, that would indicate that it's breaking above this blue line, this exponential moving average. This you see that blue line? If it breaks up above that blue line, that would indicate more bullish momentum. This blue line oftentimes acts as a support, as you can see, when it's bullish, and a resistance when it's bearish. And right now, it is acting as a resistance. It's at a support, so it seems like it's less risk to buy right now. It's kind of like, look at this trend. You see the blue acting as a support, and then right here is acting as resistance. It bounced to the support. We would wait for confirmation that it breaks above this. It would kind of look something like this before we buy, and then we most likely would want to make a trade somewhere in this range up to this $110 range. The reason I'm looking at this one is because they have that mix. They bridge the gap. So take a look at Teradyne. I'm just going to call it Teradyne stock. And we'll also go to their website, Teradyne here. Teradyne. Someone tell me, how do I pronounce it? And then you have their website here. Enabling the next generation of technology through advanced test solutions and collaborative and autonomous robots. Universal Robots. Find us by applications. They say, what are you looking for? Robotics? Semiconductor testing? Are you a wireless testing? Are you storage testing? They have different testing. And you can take a look at their applications They're in defense and aerospace. So take a look there. Defense and aerospace, some of their partnerships here, and the different implementations that they have. They're providing what looks like some systems to be able to build out integrations for the company to do better. They got software solutions, production board test parts, and all those things. The robotics is particularly what we're looking at. Collaborative robots. So as you can see, collaborative robots kind of look something like this. They're autonomy for anyone that's working and needs that extra helping hand. And they have a nice video here. You can see what that looks like. And you can have some use cases where they're used. It says improved workforce. Cobots automate and streamline repetitive processes so staff can be assigned to jobs that provide them with new challenges. By automating highly repetitive tasks, cobots give your team more time to think critically, innovate, and make better use of existing resources. The result, better performance, and more importantly, higher levels of satisfaction and employee retention. This is so true. As an entrepreneur myself, I have some employees that I work with on a daily basis throughout our companies. And I can tell you that the number one thing that I'm doing with all of our employees is, hey, document how you're doing things. How can we replace what you're doing with AI or maybe someone else that's just starting, so you can think more critically and be able to solve bigger problems in the company. That's what we're thinking about. How can we provide more value? And this company is providing value by helping these different manufacturing places be able to streamline that process. So you can see cobots require a low initial investment, and traditional robots have an average payback time of a year to 18 months. Not very much time to get your money back for investing in a robot. So what we want to look at with this stock, they have this market cap of 14 billion. So they're already kind of big, but they've been volatile recently. And this is where we look at it. Their financials look, well, good. The interesting part is they're bringing in the same amount of revenue, actually more revenue than Symbotic stock, but their net income is pretty positive, like significantly positive and consistent. Symbotic was kind of hovering there, but they started really surging here back in early 2024. They increased their revenue and their profit margins are now at around $100 to $200 million in profit. They're beating their earnings, they're beating their revenue, and that indicates that if you look at their market cap, they're valued at 14 billion. That's about the same as what Symbotic stock was. So if you looked at Symbotic here, they were at 13 billion. Teradyne here is at 14 billion. And Teradyne actually has better revenue than Symbotic and better net income. Now, Symbotic could have more potential because they're simply only in the robotics side of the supply chain for that industry. But Teradyne is seeing more consistent growth, and I see it as a less risky investment to invest in as a beginner. So that's something to consider. But overall, I like the financials, and we're looking at a recovery here of potentially here. That'd be about 30%. If we see that previous kind of high, would be about 90% potential for profit. The RSI and the MACD down there are looking a little bit more on the oversold side, which would indicate more of a buy. However, you want to just make sure that no matter what, you're going in with a plan. The number one indicator of success that I've found for myself or working with other investors and traders comes down to if they have a plan when they enter an investment. Could be any investment. When you get into a trade, what's your criteria? Right here, we would say we're cutting losses somewhere around 83 to 85. We would look for a recovery of maybe up to $100 a share here or up to $160 a share, which would take more time, but that would be a recovery of, let's say, 90%. We don't always take big positions, but if you took, let's say, a $10,000 position, that could be a potential $9,000 trade to capitalize on. Now, again, if your risk is about 1% or something like that, you could also lose $200 or $500 or more depending on how you manage your risk. But I do see it at more of a less risk in this area than most stocks in this term, right? It would make more sense you'd see a recovery here than a continuation down. Now, on the other hand, a stock has a greater probability of continuing in the direction it's going than reversing, but we're already starting to see somewhat of a reversal here and a validation, not so much a confirmation, but a validation of this support. So that's why I have it at number 4. And when I say number 4, I actually kind of mean like number 2, like I like it a lot. Anyway, number 3 is going to be Intuitive Surgical, and they are ISRG. So we're going to jump in. ISRG. Take a look here. This is the company that's the creator of the Da Vinci robotic surgery system. Now, thousands of these robots perform surgeries every single day. So this is a cash generating machine. Think about this. A doctor gets a lot of money every year. What if you have a machine that can perform as a doctor and do it just as well? And not only that, it does it better than a doctor. Well, that's what this company is working towards. And you can see this trend that's happening. They recently pulled back with the rest of the market. There's this trend here, right there. And you can see it's quite prominent in its growth. You can see that this is the level that it's kind of continuing into. That was a pretty big sell down there, but still kind of validating again around this 200-day moving average. I think this could be a similar move. The overall technicals right now, kind of similar to that other stock. Looks like it's sold off. Looks like maybe we need some more confirmation of an uptrend here, but that reversal or continuation would be about a 25% margin for profit with little risk if you're playing this pattern. So it would make more sense to be looking at this with the same type of eye as, let's see a little more confirmation. A break above this EMA would indicate more of a buy. And that would put us in a better position to be able to make a trade smart here. Now, the RSI and the MACD are also in that position to look more like a buy. But as I'm saying, a stock, it has a greater chance of continuing the direction it's going. Now, overall direction looks good. It looks great, but it does have some risk if it doesn't hold this level. So you got to watch it closely, probably set your stop loss somewhere near here, and then expect it to recover up into this $550 range to $600 range. I see it as a potentially great play, and I'm not saying necessarily that I'm just going to buy it, but we'll have to see how it reacts at market open. So again, we'll be there in StockMate. If you want to watch me trade live, it's the second link. Would love to have you guys there as well. We got a free t-shirt for anyone that joins lifetime access. Oh, I don't have it next to me. But a free StockMate t-shirt, which I'm super pumped about. And anyway, the robotics side of things, ISRG here, and you take a look at the stock. I want to go into the financials, but before we get there, let's get there. Let's go there. The revenue is higher than almost any of the other robotics companies we covered so far. The revenue is at $2.4 billion per quarter, not per year, per quarter. And it's interesting because you take a look back at quarter one, they were at $1 billion and 500 net income. $1 billion or $2 billion. Then they grew to $2 billion. Then they're at $2 billion again with the same net income. And now they're at $2.4 billion with more margin, more net profits. So the reality is they're beating their earnings per share by 23% there. Revenue is up. I see them as a company that's potentially on the verge of continuing that trend that we saw and we mapped out. And the interesting part too, though, is their market cap. Their market cap is up there. It's at 173 billion. So their market cap is very high as well, but we like to see the positive net income as well as the positive growth, which is why most investors are looking at this and saying, yeah, it seems like it's a consistent cash flow, high margin. They got a moat around their company, and it's a pretty well protected long-term investment in robotics. And it could be a good surgical or type of play that would be in the the medical industry as well, which most likely will continue to grow. So that's a good market as well. We take a look at their overview on SRG. Is it SRG or ISRG? And we'll search it Intuitive Surgical Inc. Let's take a look at their site here. So as you can see, Da Vinci 5, they're even performing surgeries here. It's like human intervention exists. Moving surgery forward again. You can see how they have this. Consistency and precision. They have their different tools that you can look at, from data insights to action. They also show that doctors are able to easily use it, and surgeons are finding it to be quite useful, and they have FDA clearance of their new robotic surgical system, the Da Vinci 5. If you take a look over here at events, they got healthcare. Let's see, patients, about. Go to investors here. Over in the investor overview, they have their stocks. Here's some of their recent growth articles. Intuitive announced $45 million donation to the Intuitive Foundation to promote health and advanced education. So they're investing back into the education of their company. Meta-analysis published in Annals of Surgery shows benefits of Da Vinci surgery across 7 oncologic procedures compared to laparoscopic and open surgery. So Intuitive president here appointed new Intuitive board of director. There's FDA clearance. They've had some good stuff happen throughout 2024. And a lot of their contracts are so ongoing. They're happening all the time with these new different hospitals that they don't have these one announcement. They always are getting revenue. It has to be something massive to even see that report. So the other one that you can look at is about, and you can look at the newsroom. I think that's similar here. So they have some more like, I guess they're more blog post type. But the reality is that they're growing fast. They're in an industry that's obviously going to generate revenue. And if they're used by doctors, but not only used by doctors, using AI to perform tasks autonomously, the value, we are at a new plateau of research in medical that is a beautiful time. We're in a golden age right now. I really do think we're in a golden age of medical research, and it's brought us to, again, a new level of growth, and it's good for the human race. People worry too much now about, is this doctor going to perform a good surgery? Hey, look at this. They're getting so good at surgeries that a lot of people just maybe worry themselves into an early death, Man. Oh, okay. iRobots Corporation. This is the next one. So the financials look good. Chart looks good. Again, ISRG would be looking to buy around $490 somewhere in here, and be looking for $500 plus, actually, somewhere in here would be more an indication of a reversal. And that would be the trend that we'd be looking to invest in. Now, when it comes down to the next iRobot, this one is iRBT. So they're the makers of the Roomba. I don't know if you guys know the Roomba, but I've had one before. It basically goes around inside of your house and it cleans the floor. It's pretty epic. And this company has had some serious volatility lately. Take a look. You might say, whoa, what's going on there? Well, they're consumer based, so the revenues can fluctuate a little more. Let's see, iRBT stock. Let's take a look at their financials. Their market cap's smaller, $100 million. Take a look at their financials here. Their revenue was down, so they're not as favorable. They beat their earnings per share in quarter 3. Here you can see they looked really good. Revenue was going up. So again, smaller company than any of the ones we just covered. The stock's been pretty beaten down lately, but it could also be kind of a value pick for upside. And that's why I'm including it, because there's also some Amazon acquisition plans here. So if Amazon finalizes their plans, at least I believe that's been the news, that could be really big for the company as well. So revenues are still growing. as you can see, from beginning of year, they were 150. And look at that, year over year is doing okay. And then it dropped a little bit with their net income dropping down in the last quarter. So we'll have to see how that looks. Now, the company, again, not as favorable, a little more volatile. Let's take a look at this chart here. I would say there's no indication of a reversal just yet. And there's no indication that you would want to buy this stock right now. In fact, I would most likely wait for a break somewhere in here of around $13. And then you'd be looking for a swing. Essentially, since it's such a small company, like an Amazon buyout announcement can be huge, this is the kind of next level that you would look at for the company. So keep that in mind. It's somewhere in here, okay? And I wouldn't buy until around literally $11. You just want more swings to be clearer. However, if you start to see a breakup, I could see potentially some moves. Part of what caught my eye about this one was the consistency. There was a couple weeks in a row here. You can see this goes back to April 19. Check that out. That's a support there. And then that's a resistance level that has been, honestly, it's been quite consistent. So I just wanted to, let's see this level. It was swinging back and forth quite a bit, not perfectly, but starting to develop some movement. Sold down, and now we'll have to see how it reacts. There's no indication, so I don't want to go into the technicals anymore. Again, I'd want to see a break, definitely above $5. And the financials, they look all right. If you take a look at their company from iRobot, you can take a look at their company. They're mostly in consumer goods, right? So they focus on the Roomba. They have their vacuums as well. And they work not just for consumers. They do have some big contracts as well with like big janitorial types with like skyscrapers and stuff. You've seen those big machines that move around and make sure that the floors are clean? Yeah, they do that. But mostly they're in consumer appeal. So that's part of the reason why I would say their revenues are fairly low. I mean, you can only tap a consumer market, something like this, to such a large extent, given, you know, how people have different types of floors and what they value, and also I think awareness might not be as heavy, but I think we all know what they are, but maybe they just haven't been quite as good as, you know, we've always wanted them to be. I guess that's how I feel about it. So I don't personally have one. But I do realize that they can be helpful and they can also provide value. I just have them here more around here because they're not as, I would say, immediate value for the world. They're good. They got some potential, but financials look okay. And then, yeah, we'd be looking for a buyout essentially. That was one of the big ones that we were looking at, was potentially that they were going to get bought out by Amazon. So we'll see if that works. Now, when it comes to the last one, it's got to be Nvidia. That's right, NVDA. Quick and short, this is a large cap company that you want to take a look. Yes, they're in GPUs, but they're also powering robotics software. And to be honest, they are the backers for most of the robotics companies. Robotics are huge for Nvidia as well, and you can see this recent pullback here in the markets has basically allowed for a little opportunity there to present itself. And I guess we have like a little watch list buy there. That's funny. We were trading CTM this morning. I think we're up about $300 there, and then Cooler stock was up a little bit there. We're up 2%. And if that one goes good, that could be like a couple hundred dollars pretty easily. But anyway, this one was just kind of a watch list ad right now. You can see this different trend here that's starting to develop, that while it was uptrending, now it's starting to drag out itself a little bit here. But there is maybe some more upside here for Nvidia in the near term. They've doubled revenue in their earnings, but their past two earnings, they've dropped. So it's like, what gives? They keep dropping on earnings, but you do see that they're doubling the revenue. So long term, it looks great. About a 33% upside. I would imagine pretty easily. It just would take a time to get there. It's a larger cap company. Most robotics companies actually run on Nvidia's GPUs, Nvidia's hardware, and you can have it as they're really good. They're growing into GPUs. One thing to realize about the company is that they have a competitor, and their competitor is AMD. So AMD stock, guys, the reason we bring it up is because, again, we have that sale going. I don't know if it was still written down here, but essentially what we have is everyone's talking about Nvidia. It's one of the biggest talks of the town. But AMD, they're powering these Starlink satellites, and they've been taking on GPUs very fast. I don't know if you know, but the CEO was the CEO of the year and a cousin of the Nvidia CEO. But we're betting that AMD stock hits basically $140 per share by June. Now, the sale for Stockmate is if it hits this level here, see this level of $140, then essentially that would be a continuation of this trend. And if it does hit that, then you get $400 off of Stockmate, which is where you get to watch me trade live every day at market open. The resources in Stockmate have been really valuable and have been improving every single day. We go live each morning. We had some earnings come out. We were very bullish on Micron. We had some price targets here as we have for every week. Micron was bullish, price target of around 110 to 120. This released at the beginning of the week, and they were at $100 a share. And Micron, throughout the week, they had some earnings do well, and they surged up to $110. And I got a message this morning before they sold back down that Johnny Daniels, one of our members, bought and sold in the earnings and made a significant profit by doing so. We also had some price targets for LAZR. Current price was $5 at the beginning of the week. I said price target here looks like about $6.50 to $8, going through the three-part analysis of the market, the analysis with the chart, the financials, and the news, and then the prediction of what it looks like. And essentially, I had a $6.50 to $8 target. I don't know what it's at today. We could search it up. LAZR is right here, and they are at $8.20. So they just surged. Look at that surge that we called out earlier this week. $8.20. That's just above our price target as we close out the day. So I don't say this that we're always right. And there's Johnny Daniels that actually capitalized on it. He saw it a few days ago. But part of the reason why we have these targets and why they're helpful is because inside of Stockmate, we focus on mindset and how to have plans when entering trades. That's what's allowed me to grow my account. And you can see this. I wrote this a few years ago. It's not ChatGPT or anything like that, but it goes over your mindset, how to have ordinary versus profitable. How do you have a profitable vision when investing? So it goes over, what the ordinary trader says versus the profitable trader. Some of my story. You could also see how to learn, even like having a trading plan. Like some people don't think about that, or when it comes down to just like emotional IQ, the mindset of a trader, emotional IQ is there as well. And if you'd like to get your hands on all that and watch me trade live every day at market open, it's the second link below to join Stockmate. Would love to have you there. We also have that sale running that's awesome for AMD, and I would look forward to seeing you guys there at market open on Monday. So those are my top 5 for robotics. Hopefully you guys enjoyed. If you had a good time and I earned your thumbs up, hit that like button. Do consider subscribing, and I'll see you guys in the next video. Take care.